Um, we are, aren't we? Fantastic, fantastic. Let me just set this camera up here now, and then we are going to get started. Alrighty, guys. So, welcome to today's live stream. I want to do for you today. Um, in today's live stream that I want to do for you today, I want to talk about why I sold my gold. I want us to talk to you about why I'm holding silver right now, and I also want to talk to you about why I'm looking at the GDXJ mainly to invest some of my funds. And that's what I want to talk to you about today, and some other things that I want to talk to you about when it comes to you doing more long term in these markets. So I want to share this with you because I want to help other people understand the way that I invest. I have two different mentalities. I buy sort of longer term, sort of a 1 to 2 year view. That's sort of investing, and then I just trade as well too. Trading is my income. Investing is sort of my wealth bucket, as so to speak. So, welcome today, guys. Welcome, welcome, welcome to today's live stream. Once again, I'm really, really grateful for this platform to be able to share my views, share my opinions, and the support that you guys give me. So, I'm really, really, really grateful for that. So the reason why I want to cover this is because I want to share some views and some opinions that I think will really, really, really help you when it comes to your trading and when it comes to the way that you're thinking about these markets. Because I think it's really, really going to help you there, okay? And the way that I sort of do this sort of things as well too. So, once again, guys, thank you so much for all your support that you give me on YouTube. It's been a phenomenal ride for me personally. I'm not a very big sort of techno guy type thing, meaning I don't really know how to. Um, what's that? DMC says, unsure why you don't have a bigger following because you contact. Oh, your content is tops. Thanks DMC. I appreciate that, man. Yeah, when it comes down to YouTube, DMC, and I'll get into the when it comes down to YouTube, it's a grind. It's more than you've got to do a lot of things to get a following when it comes to YouTube. You've got to put out good content all the time, and you've got to do a lot of things to get people's attention and all that sort of stuff. So, it's slowly growing. And I'm just doing my thing. The thing about growing my YouTube channel, I could easily, get this to, a couple 100,000 easily. All I've got to do is just start to do some things to get people's attention and go from there. So I appreciate the support there. Anyway, let me get straight into my thoughts about where we're going this year, and where we are, where we're going in this, what's happening over the next sort of 2-3 years, and my view on the metals, the mining sector, silver, gold, and so on and so forth. So let me give you a bit of a background, a bit of a back history here. In what's happening here. What's happening right now is the government is going to continue to print more and more and more money, right? They're looking at the second stimulus round. So what do you think that means as a whole? Well, firstly, what it means is it's another Fed put into the actual market itself. So we're probably going to see all-time new highs for the S&P 500. That's the Fed put. What also is going to happen? Hey guys, what also is going to happen? Well, as they continue to print more money, it's going to continue to devalue the dollar. Now, the dollar won't go straight down, and it'll take some time for that to unfold. But it's happening right now. The dollar is continuing to get devalued because the more money they print, the less worth the dollar is. So we know they're going to continue to print more money and more money and more money and more money. Like, yes, there was a first round of stimulus and that lasted to where we are right now. Now they've got to do another stimulus package. Do you think this is the last stimulus package over the next couple of years? Because the answer is no, right? Because the effect of what happened with the virus situation is that it left a major gaping hole in the economy. So the government's trying to fill that hole financially. People, we saw bad reports all over the place. So I won't sort of bother your time when it comes to that, but we see unemployment, all that sort of stuff. So we know that by me doing my research and actually mainly just following the Ray Dalio stuff, the Bridgewater stuff, they say that it's going to be an 18 to 24-month hole in the economy. An 18 to 24-month hole in the economy. So does that mean every 4 months or so, when the stimulus starts to run out, they have to then create another stimulus package and create another stimulus package? The answer is yes, until they can sort of hopefully fill that hole. So the interesting thing about what is going on right now is, and where we're moving forward, is they're going to continue to do that. So what's going to happen? That's going to continue to devalue the dollar. Devalue the dollar is also going to put pressure on gold, silver, and I believe mining. So here is the interesting thing about this, guys, is so with all that what I've just said there, I believe that there's all this money into the system right now, and a good chunk of it is actually going to savings. A lot of people are actually saving more than ever before. So yes, a lot of people out there are being morons and they're not being productive and they're buying games with their stimulus package, and and they're just not doing nothing. They're just spending all their money, especially with Robinhooders right now. And I know a lot of people who bought Kodak when Kodak spiked. Robinhooders, oh my goodness, this is amazing! They jumped all over it. If I have a look at my Kodak here, Kodak, Kodk. Yeah, so I think around 35. I think Robinhood has started to jump on. Started to jump on. Started to jump on the Kodak bandwagon, and now they're hurting big time. So look, for example, you can see what happened with Kodak: big spike up, big spike down, and so on and so forth. So you can see what's happening through there. The really interesting thing is, guys, is that let me just, those investors are new. Exactly right, they are new, and they just don't know, right? And so there's actually a good comment there from what's that, Master Paul, and you can see the reason why I do these videos, right, is for people that are not in, say, gold right now. It's the worst time to be getting into gold. If you're already in gold right now and you're massive profits and you're okay with the swings, then that's a different story. But for people who are just, oh my goodness, it's time to get into gold now because it's been up for 12 months. So if I go and so that's basically looking at Kodak there. So here's the interesting thing, guys, about so all this, as I was saying before, so all this printing of money over the next couple of years to try and fill this major gapping hole. One, it's going to continue to devalue the dollar. So that's going to put pressure on mining, on metals, okay? Secondly, there's going to come a point where there's going to be inflation. And with all this printing of money, it doesn't create inflation normally. But the turning point when inflation starts is when the consumers who are, we're not hyperinflation now, no, we're not there yet, but we're starting to slowly see inflation. The big inflation starts when the consumers who have been saving a lot, i.e. velocity of money as it's been dropping down. Oh, by the way, guys, anything I say in this video is not financial advice. I'm not telling you what to do or where to go or what to buy, what to sell. Anything can happen. And no matter what position you put on, guys, that one position can be a loss, whether it's an investing position or a trading position. So just understand that, okay? Be smart about the way that you trade the positions. anything can happen. It really, really can. And that's the mentality you need to have. If this is a losing position, am I protecting myself? That's the number one thing you should say to yourself. I'm getting in here. I'm getting out here for a loss if it is a loss. And if it is a loss, am I still protecting myself? Meaning, am I still going to have a good chunk of my account there? And the way that I see it is that if I have a big loss, am I still going to have 90% of my account there? That's a big loss for me, 10%. Anyway, back to what I was saying before. So all this printing of money right now is starting to create a little bit of inflation, especially with foods, groceries, wherever you get your food from. So the thing is, guys, once the savers start to get to a point, and they will soon over the next couple of years, where because the government's going to keep printing more money, once the savers feel like they've actually got enough money behind them, then the spending is going to start for especially the baby boomers with the retirement. So when these baby boomers with retirement who have been saving a lot of money, and that's the velocity of money been dropping, i.e. the amount of people that are actually going out there and spending. That's the reason why, as velocity of money has been dropping, so has been that the government's been printing to try to fill that gapping, that hole, especially right now with the virus. So unemployment drops, spending drops, income drops, government prints money to try to fill that hole there. So there's going to come to a point in time where all these savers, baby boomers, are going to start to feel a little bit safe, right? As they continue to print more money, and as the government keeps trying to just do whatever they can to buy everything up, everything. And we saw the early signs last year, right, with the auto loans, basically, yeah, with the car loans and the auto loans debacle, right? They started spending billions and billions of bailing out these companies. Now, and it's just they're going to buy up everything. So once the velocity of money starts to pick up, and once we start to see the velocity of money pick up, i.e. people start to spend more money, and it starts to change hands more, with all that and all this currency in the system, that's when you're going to start to see things really, really, really pick up across all markets. And we're already starting to see that once again, just a little bit with the essential needs, what we need, and so when it comes down to that, that's what we're likely to see. So inflation is going to start to pick up real soon, and that's where the government is going to realize that they printed too much money. There's too much currency into the system, and it's going to be a disastrous effect. And all this is creating the end of the world as we know it. It's not a bad thing, right? It's not going to be completely zero and all that sort of stuff, but something else is going to replace it. So, with all of that being said, the view that I see within what I've just said there, the biggest things that I see are going to do well out of this are going to be metals miners, and even those. And we don't normally associate storeholds of wealth with different outlets, but even if we're in this environment right now, different things, possibly even like Walmart and these other companies out there, may be a really good storehold of wealth, because the public obviously needs food. So here's the thing. The way that I like to invest my money is this. I like to buy when there's not much going on. So if you look at gold, okay, if I go back to my gold chart, where's my gold chart? Okay, if I go back to my gold chart and I look at this. So back in 2018, 2019, I noticed that gold was continued to not do much. As soon as we start, and it was actually, 2018, 2019, as soon as I started seeing this thing starting to gain a bit of strength above 1,300, above 1,400, we were breaking out at that time, above 1,400 on gold. I apologize, I can't show you the chart, but we're doing that. But because we spent so many years, from 2013 and 2019, not doing much, I knew we were just starting a bull market. Not much going on for quite some time. No one didn't even want anything to do with gold. That's when I had longer term. I had a couple of year position. It was actually a couple of year call option on the GLD, and I just let it go. Well, when it comes to gold, now I've capitalized massively on a good chunk of this move up. I've actually sold all that, made a lot of money when it comes to my long-term GLD position. And so I'm just filtering my positions now when it comes to, you could, if you want to buy physical, guys, you can buy physical. I prefer to just be able to trade this and be able to continue to accumulate the money. So, and I want to be able to get in and get out really, really quickly. So if you want to hold physical, guys, it's totally up to you. It's just each owns to their preferences. So I did that because in my investing, when there's not much going on for many years to come, when it does start to break out, that's the start of a lot of things to come over the next couple of years, like a big move. Now you're going to get your swings and your pullbacks and all that sort of stuff. That's what you're going to see as the market moves. But then there comes to a point in each individual markets, like gold, where we start to see a bit of a where we start to see a bit of an extension move up. And you can see gold actually had a bit of a down day last week, right? Futures actually got crushed last week on Friday. So when the market's not much going on, with all of what I just said there, I saw what's happening right now, and it still is happening right now, and moving forward, I saw gold is probably going to be a very, very valuable asset. But also, when there's not much going on for many, many, many years, and then we start to break out, that's a sign that when the whole calm before the storm analogy, it's such a simple concept, but it's so powerful, and it's made me a lot of money over the last couple of years from understanding this thing and just being positioned. That when there's not much going on in a market for 3, 4, 5 years, and then we just start to break out, there's a bit of activity happening there. That whole sideways is the calm, and then the storm is what we've been seeing over the last 12 months or more, probably a couple of years now. And gold. Now, I didn't realize gold, what is that there? Yeah, over 12 months. I didn't realize gold was going to make such a vertical move right now. I thought it was going to take a lot longer. I actually thought about probably maybe 2 or 3 years it was going to take to get to all-time new highs. I didn't realize it was going to happen so quickly. But because it's happened so quickly, I've sold my position, and now I'm looking to take some of that profits and filter it back into something else. Okay? So keep in mind what I've just said there. I'm a trader, so I'm an active trader. I get in and get out really quickly on maybe a couple of day period up to a couple of weeks, maybe sometimes a couple of months. And then I'm an investor where I'm looking to get in to hold for maybe a couple of years, have sort of like a 2-year view of what's happening in their markets, okay? So that's what I did with gold. Gold did really well for me. Right now, I'm out, and I didn't ride this last move up. I got out. I sold all my position a couple of weeks ago, so I didn't get this last move up. Looking at it now, my lessons was that $2,000 was a magnet, and all-time new highs was there. So I could have probably held on a bit longer, but I still made a lot of money throughout that whole move, from the breakout of 1,400. Up to around about sort of, what's that, 1900, somewhere around there. That's a nice move, right? So that's what I did with that there. So I've got that profit sitting there now, and I'm looking to filter that into something else that's going to capitalize on a couple of year period. So that I'll leave that there for a minute. So why am I still holding my silver then when it comes to silver and gold? Because once again, guys, if you look at the whole calm before the storm effect, if I look at, so what I mean by silver is that I've got SLV options. And if I look at the silver, last year I actually bought silver, and that big flash crash that happened back in March last year, I was actually holding my call options. So my call options were way underwater. But I realized at that time that this was probably that last little drop before we start to see a big move up. So I was, actually it wasn't last year, yes. So I actually bought call options a couple of years ago actually no, my bad. So yeah, so 2019, the middle of 2019, I bought call options. We had the big flush, and then we rallied up. Then what I did is, as we rallied up, I held on to those call options. I had about 2 years worth of time on these options, and then guess what was happening? So with the silver market, the market went sideways. Okay, so we didn't do much for a long time. As you can see, if you bring up the silver charts, basically did nothing from 2017, or really from 2015 through to 2020, apart from a little move up. So I knew, once again, the calm before the storm. Something's going to happen that's going to trigger this silver to go crazy. So I held on to my longer term positions here. As gold was already in a massive bull market, silver's going to catch up. So I'm still in my silver positions. Why? One, because we have just started that that storm effect, I believe. So I got in around sort of $16, somewhere in there, $16, $17 with my options. And so this move up, I'm still in right now. The reason why I'm still in right now is because I'm expecting a pullback, but I don't know exactly when the highs and lows are going to be within these pullbacks, guys. I don't know that. So when it comes to silver, what I do believe is over the next 2 years, we're going to see all-time new highs. That's my view on silver. So just like with my gold position, I held on to it, and I was going through the runs, and I was going through the pullbacks and the sideways, and it even had a bit of a flash crash there for a few months, and then it continued up. So you got to endure those pullbacks. So my longer term view on silver is still the same. Yes, I do expect to see a bit of consolidation or a pullback out of silver, but I believe we have just started what gold did back when it broke 1400. Silver, I believe, is going to get a pullback, but the long-term view is all-time new highs for silver over the next couple of years. So I have options, and I think I have like just over a year left or something like that on my option value. So what I may have to do is sell my option and then sell my option for the current value and then go buy some more time. So say, for example, I sell my option right now and I sell the whole position, and it's worth 200 grand, or 300 grand. What I'll do is I'll take that, say 300 grand, and then I'll go buy more time so I can just endure. And yes, the market's going to fluctuate. I don't know how this is going to work out. All I believe is, and all I'm seeing on the charts is that this vertical spike, yes, we're probably going to get a massive pullback, guys. We're probably likely to get a massive pullback out of the silver. But that doesn't mean that I don't think it's going to make all-time new highs in 2 years' time frame. If you're not in silver right now, it's the worst time to be getting into it because you've already made a massive move. As I said before, when I'm looking to invest my money, I'm looking to invest my money where there's a massive calming effect for many years. If I'm looking for a couple of year bull market, I need to see a period where there's not much going on for many years because that calming effect is what I call the energy building phase. It's not doing much. It's calm, right? It's not doing much. It's not doing much. It's not doing much. It's building energy. It's building energy. It's building energy. It's building energy. And then just like with gold, when it broke 1400, we started to release that energy. So the longer it goes sideways for, and this is not for all markets, guys. You can't use this for a penny stock and so on and so forth, but big sort of sectors like gold, when we go sideways for a long period of time, it's building that energy. Then we release that. We're releasing that energy, and you'll see this. And this is what's made me do so well out of these markets for a long time. It's understanding these concepts, amongst other things that I was saying, like last year, like yesterday, about things are oversold, and about when people are fearful, you should buy, and people are greedy, you should sell, and so on and so forth. So what am I doing right now with my funds? So I just sold out of a few weeks ago, I just sold out my gold for a really, really nice profit, by the way, guys. So I captured most of this move up with gold. I'm out right now. If we get a really good pullback with gold, I'll probably buy some more. But right now, my position that I'm looking to get into, the best thing that I can do for my money for the next couple of years is the GDXJ. The GDXJ. Now, I'm not telling you to buy right now, guys. I'm not telling you to do anything with this position, right? This actually could be a losing position. But I'm looking to take my gold position and the profits that I made and filter that into a position in the GDXJ. Now, why am I doing that right now? Well, just like I explained to you guys, and just like I shared with you, when gold is doing nothing for many, 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 many years and we start to break, guess what? We're starting to see the releasing of that energy. And the releasing of energy is likely to see a nice bull market. Now remember, guys, a bull market goes with when the market goes for a run, and then we have a pullback. And then we go for a run, and then we have pullbacks. Just like silver right now. We've gone from, this is the first spike up. We're probably not going to see a pullback. And then maybe another run again. That's why I'm not selling my silver yet, because we're not at that point yet. We'll know when, especially with silver. Silver is a wildcat, so expect some big volatility. So when it comes to the GDXJ, why am I mainly focusing on that and not the GDX? Well, if I look at I'm just looking at my other screens right now. If I look at my GDX has already had a very, very, very nice move up towards, it broke, once it started breaking 32. Okay, so once it started breaking 32, that was the what? If you look from say 30 to 20, you can see it didn't do much on the GDX. Again, I apologize, I can't show you the screen here, but you can see how from basically 20 to 30, it didn't do much since 2013. So the GDX has just broken out right now. So while I do see there's a lot more upside potential with GDX, I do see once again there's going to be pullbacks, guys. So if you want to capitalize on a couple of year movement, you've got to be able to understand this market's going to run, then it's going to pull back. It's going to run, it's going to pull back. But by looking at the markets right now, for me personally, I see that there's a much, much, much better opportunity for my investing, say a 2-year view, in the GDXJ right now. Now, not right now. We have just started to slightly break out. And so right now, it's, as you can see, from if you look at your GDXJ chart, from $30 to $50, that was the range in 2013. That's like gold breaking above 1400. So when gold broke above 1400, and we've seen what's happened over the last 12 months, that's what's happening right now with the GDXJ. It's just breaking above 50. It's starting to release that energy. So we spent from 2013 to basically just recently building all that energy, that calming effect on GDXJ. We're just breaking out now. So what I'm looking for, we just got to break out. I would like to see a bit more of a pullback. And then as the market starts to pull back, I'm going to then go into it. I'm then going to get into a position. And then I see massive moves to come. I'm going to buy as much time as possible. I'm a very big options guy, by the way, guys. I'm very big options in these markets. So I'd like to buy as much time as possible and just let it go. And I do see, once again, that over the next maybe 2, 3, 4 years, I see GDXJ making all-time new highs. Just like gold did when it broke 1400, and now it's above 2000. So I hope you can see that from what I'm sharing with you guys, if you can understand these concepts of what I'm sharing with you, you can make a lot of money. A lot of money. You just got to be able to understand these concepts and then give yourself time. And one of the most powerful concepts in the trading and investing arena in history, to me, has been what I've just explained to you. That when you see a market like gold not do much for a long time, and then we just start to break out of that not much going on, we know we're just getting started. The question mark is how long it takes for that to happen. We don't know. So for the GDXJ, it may take 4 or 5 years for it to make all-time new highs. I understand that. But my 2-year view right now is massively bullish, especially on the GDXJ, because the GDX, if I look at my GDX chart, guys, I can see that from the high of, say, roughly around 65 to the low, the GDX has already retraced 61% of the down move that had happened. 61%. Sorry, the GDX. If I look at my GDXJ chart, though, and I go from the high of say 170 down to the low of 20, we haven't even retraced 38% of that move. That's why I like GDXJ more than GDX right now. And where I'm looking for strategic investing positions that with at least a 2-year view on it. And so that's the reason why I like GDXJ more than GDX, because we have once again, we have just started that breakout, which to me, it's just starting the bull market now. So exciting times to come over the next 4 or 5 years. And then on top of all that, we haven't even retraced 38% of the down move that happened in 2012 into 13, where GDX chart has retraced almost 68%. So GDX has already made a big move. If I'm getting in that, I'm already too late behind the I'm already late behind the 8 ball with the GDX. But the GDXJ, I'm not. It's just starting that breakout now. And I hope you can understand that when you start to understand these concepts, you can make a lot of money, guys. You can make a lot of money. Obviously, there's risk to these things, guys. But that's the way that for the last sort of 3-4 years, guys, when it comes to my investing positions, I do have a trading strategy. If you go to johnsfreegift.com, if you go to johnsfreegift.com, put your email address in, the very first video I give you in that trading course, I'll teach you more about that calming effect, more about that. I actually give you a video, I give you examples of when the market does nothing, then it starts to break out, It's so powerful, guys, when it comes to your investing and comes to your positions. So my whole purpose in doing today's video for you is not only to give you a view of what's likely to happen moving forward, but hopefully of me sharing with you what I'm doing personally, that hopefully it's going to guide you and to share with you that there's some simple concepts within these markets that seem to be complicated, that when we start to understand these simple concepts such as the calming effect, not much going on for many years, and then we start to break out, just like gold did, just like silver's doing right now, just like GDXJ doing right now. There's such a powerful concept there. So if you guys have any questions, then just let me know. And then, oh wow, so so let me. I'm just going to go through some questions now, guys. I'm going to help you guys out. Let me start from the start up here. DMC, you retracted your message. What's your level for silver? I see all-time new highs coming, but over the next couple of year periods. But again, that means we're going to get runs. We're going to go for a nice bull move, and then we're going to get sharp pullbacks. We're going to go for bull moves. We're going to go through quiet periods and so on and so forth. Off the topic, what are your thoughts on UV air filter industry? Oh, I don't know. I haven't really looked into that, so I can't really comment. Hi from EU. Hey, Malaysia. I am short gold and silver right now, looking to take advantage of the short-term correction. That's the wrong, Anthony. To me, that's personally the wrong sort of approach in there, because you never know when the pullback is going to start, one, even though we are in a extended move. And secondly, you don't know how long the pullback is going to be. And then thirdly, you don't know if it's going to be a pullback or a sideways consolidation phase. So we just never know when it's going to start the pullback. And you'd never know what type of pullback you're going to get. That's always the question mark within these markets, right? Is it going to go through a pullback or is it going to go through a consolidation phase? So always the best positions in a bull market is wait for a big dip first or a consolidation, then buy in on that. Don't try and short a bull market. That's the worst thing to do. Hyperinflation now? No. Hi, sir. May I know what your opinions are about gold and silver if they discover the... I don't think it has much relevance right now. Gold, I think gold long term is going to be a lot higher than it is right now, guys. Based on, I don't think the vaccine has anything to do with what gold is doing. It's more what the government's doing and the devalue of the dollar and so on and so forth. Fed 2% inflation targets your call. Who knows? I think 2%. Maybe on the short term, but long term, I see much higher inflation. There's going to be big inflation. In the next 5 years, you're going to see the government do whatever they can to start to pause inflation, because they're going to start to do things like come out and put temporary pauses on on different prices to try to slow down because it's going to start to ramp up big time. I believe anyway. Markets are psychological and psychological. Yes, I think I actually, Millard. I actually heard that from. Let me just move this out of the way. I actually learned that from. I heard that from Mike Maloney. So yeah, quality theory of money. I disagree. I believe that a stock market crash is bullish for the dollar. Well, Yanni, you've been following me for quite some time. What I want you to do, Yanni, Mass, is don't focus on, well, if the market crashes, it's going to be bullish for the dollar, because that's just your thoughts and your opinion. The best thing to do is look at what that market is doing, look at what the dollar is doing, and then focus on that, because the charts are going to give you some clues. For example, gold breaking about 1400 over 12 months ago, before any of this any of this situation happened, the market was telling you something was going on. So don't focus on that. I disagree and blah blah blah. Who cares what disagree and so on and so forth? Just focus on that market, because that market is going to help you there. Gold standard incoming. We may be back to that, or maybe just a digital currency with the whole blockchain. Yeah, you really got to look at the moving averages. That's the secret. First Nation, that's not the secret, no. Because even though the moving averages might be trending up, doesn't mean the market's going to continue going up. So the secret really is actually in the market itself, the charts itself. Because once again, as I said before, First Nation, right? What allowed me to capitalize on majority of this bull market in gold for the last 12 months wasn't moving averages, but was understanding that major concept of many years of sideways, calming, energy, and then we start to break out. We're likely to make a big move. Then it doesn't happen all the time, guys, but I'd say 8 times out of 10 you see really big moves, and 2 times out of 10 it doesn't do much, and you actually get stopped out. A crash would be definitely deflation, even as liquidity dries up. Event. Reset coming. Oh, definitely reset coming. Yeah. I'm short on gold. Yeah. Okay, let's actually see here. Hold silver in your own possessions. If you don't see deflation, then we will see rapid inflation in 2 to 3 years. I see inflation initially. Especially with the markets, like towards the end of this year, especially with tech stocks. I definitely see a bit of a deflationary period coming again. But long-term inflation, yeah. These gains in gold and silver is paper as well. Well, I would disagree with that. For me, I cashed out, so it's actually real money. That's why, so it's actually, it is paper if people are just holding onto paper, but if you can do what I did, that's the reason why I like doing the way that I do it. I still believe gold has a lot more room to run with the amount of money that has been printed. I think gold can still double from here. I actually agree with that, investor world, but I also understand that when any market starts to become very overextended, we see pretty sharp pullbacks. Just look what gold did. If you have a look at the gold chart, notice what actually happened. So notice what happened in gold in March of last year. Notice that big sharp pullback from 1700 down to 1450. Right? So every bull market has sharp pullbacks. That's what I'm saying, guys. So if you think it's just going to hold here and continue going up, that's a very, very, very big gamble. Because you will see sharp pullbacks. Doesn't mean it's going to continue. I do see a bigger move from here, but not without some sort of profit taking. $50 target. Next target should blow through. This may be fanatic. Long term though. Long term. I think you're talking about silver there. Okay, let's go here. Will be a blockchain government controlled with no backing. Gold will be 2,500 by Christmas. Wow, really? There's a lot of thoughts going on there. by Christmas and 12,000 by 2025. Wow. Okay. It's a very, very big guess. Very big guess. And one of the things you must understand there, Tom, is that that's an opinion, and the only thing that matters is the market, right? So you may have that view, but please don't be 100% just in gold right now. You shouldn't be 100% in anything. It's just crazy. Because anything can happen. We could see a sharp pullback. We could see a sharp pullback back down to 1700 here. Oh, that's not going to happen, John. Anything can happen, guys. Okay, doesn't matter how good your thought is or what anyone else is saying. What you think can't happen can happen. So just keep that in your approach there. The problem with GDXJ is the majority of their holdings are actually in mid caps, not juniors. Tobias, it doesn't bother me what they hold or what they actually do. Like, that doesn't matter to me. Just like with gold, right? Just like with gold, when it did nothing since 2014 and broke above 1400, I had no idea why gold was going to make a move. I didn't need to know. The market was saying, hey, we're just starting to release this energy. So now, and then suddenly 1 year later, the fundamental came out of why gold is making a big move. So the market's giving you a bit of a clue there. So I don't really care about what they hold and what GDXJ does and so on and so forth. That shouldn't be the main thing we focus on. We should be focusing on the overall big picture of these markets, because the charts, guys, the charts. The better you can read the charts, the better trader you'll be. And I'm giving you a concept, guys, that made me a lot of money in this gold bull run. All right, guys. I'm just gonna keep it at that. And what I'm doing with silver and so on and so forth. And it's a very simple concept that can do really well from you. Of course, 20% of the time it's not gonna work. Okay, nothing works 100% of the time. So with that being said, by looking at the GDXJ chart, exactly what I explained to you, we're just starting to break out now. So if I can get a bit of a pullback over the next couple of weeks, I'm going to be loading up on that thing long term. But obviously, guys, don't do anything. Don't just place a position based on what I just said there, because who knows what's going to happen with the GDXJ? We could completely reverse and it be a losing position. Okay, so every position I get into, I say I'm getting in here. This is my maximum exit point if it gets to this point here. And for a loss, what's going to equal to the percent risk on my account? And am I okay with the worst case scenario of that actually happening? If the answer is no, then I don't put the position on. Simple. So I hope that makes sense there. SILJ better option? Nah, I wouldn't say that. M and gold. The reason why is because the SILJ. If I look at the SILJ, we have already made a massive move in the SILJ. And this is the big thing, guys, right? When you're trying to capitalize on big movements, you want to capitalize as the movement is just starting. SILJ went from $6 up to $17 over the last few months. So it may continue up, but be smart about the way that you're investing in these markets, guys. And jump in on really good quality positions. And so, for example, the GDXJ chart has just started that move, where all these other markets, they're not really giving me a good sense of what's going to happen. We're probably going to continue up on those markets, but for my money and a massively high probability of that working out, it's things like the GDXJ, what I'm focusing on right now. Risk-wise, yes, not upside potential. Exactly right, Tobias. Always. The number one thing, guys, that I always do with any of my positions, whether it's a long-term investing position, which is like a 2-year view that I have, or whether I'm looking to jump in on something and going to hold it for a few days, short-term cash flow trade for me, or maybe for a few weeks or a few months. Like I got out of a trade, I was in it for 2 months, made over 1,000% return. That was my most successful trade ever. If you look at the chart called ALT, you'll see that exactly ALT had the exact same thing there. You look at the chart, you can see ALT had that sideways period, as I was saying before. We had over 12 months of it not doing much, and then it started to break out. Then it actually gave my trading setup with that. I don't just buy the breakout, but it gave me my trading setup after that sideways phase, which was a trading setup for me. And then I And then as you can see, if you go look at ALT, that was a trade that me and my coaching clients actually did. And I picked up, and I didn't even capture the whole move, and I picked up 1100% with that. One of my coaching clients picks up 800%. There's using options here, by the way, guys, using options. So if you go look at ALT, you'll be able to see what I mean there. Look at the daily chart, squeeze your daily chart up for a couple of years, and you'll be able to see how it didn't do much for a long time. And then we started the break, and then we made a big move. It's a very, very, very simple concept, guys, but the calm before the storm, it's so powerful. The calm when there's not much going on for many years to come, and then we start to get heated up a bit, it's like, something's going to happen here. It's so powerful, guys. It really is. It made me a lot of money in the gold. So for you guys that are looking to buy gold right now, it's not the right time. Okay, be smart around about the way you position. I'm getting out right now. Oh, no, I'm already out right now. I'm out of gold too. Only silver now from $13. Fantastic. So MG, just you've got to have also your plan as well too, and also your expectations that we're probably likely to see a sharp pullback from here, right? That doesn't mean the bull market has ended. We're just going through a pullback, and that's what markets do. The amateurs who buy the silver right now, when they go through a pullback, when the market pulls back, they think there's something wrong. They think, oh my goodness, the market's changing, the market's reversing against me, it's gone to a downtrend, but it's not like that. You can find good managed mining companies that have high potential. Brad and Ash, I agree with that. The only thing is, once again, you want to not be buying based on a potential or based on a thought, but you want to be buying based on some sound fundamentals about the risk. You know what I mean, about the potential of that trade and so on and so forth. And once again, you know what I look for. I look for trades that, if I'm looking for a couple of year good bull market, I'm looking for a period where it hasn't done much for quite some time. Just like my ALT trade. ALT did nothing for a year and a half. I'm just looking at it now. And then we started the breakout, and then it gave me my trading setup, and then away we go. So yeah. What about silver? I've already talked about silver. Any idea what level the GDXJ? Any idea about levels to get into GDXJ if a pullback ever happens? No, I'm not going to tell you when to get in and when to get out. That's gonna be giving you financial advice. I'm not going to tell you when to do that. You gotta have a plan, all right? I'm just giving you a general view of what I'm looking for, and then that's what I'm going to do. So hopefully we get some form of a pullback, which I think we're starting right now when it comes to the GDXJ. Yeah, so we actually had a little bit of a pullback. So I believe we're likely to get some form of a pullback right now, which would be amazing. If we can get down to 55 or something like that, even if we can get right back down to 50, that'll be amazing. That'll be an amazing time to buy. Long term, guys, like long term. Because that major resistance at 50 is likely to be major support. Just like the GDX did, right? The GDX broke above $30. It ran up a little bit, had a pullback down to 32, even close to 30. That was major resistance. When it broke, once again, when it broke that 30, pulled back, then it found support, and then we ran up to where we are right now. It's been a wild ride, but I'm long GDXJ. Fantastic, Anthony. I think over the next couple of years, you're going to see some really exciting moves. And the really interesting thing is, guys, is that when we start to look at these markets and we start to, like with gold, when gold broke out of 1400, I don't know why it was going to start to make a big move, but my system said we're probably likely to start to see some really nice moves over the next couple of years. So place your positions, be patient, let it go. And then something 12 months later, all this other stuff comes out. So the market, and this is where, guys, it's so interesting. The collective wisdom of the market was giving us a bit of sign. Okay, gold's going to start to make a move right now. We don't know why, but it's going to make a move. And it's so powerful. Again, if you go to John's free gift, I'm giving you away a free trading course. And the very first video I give you, I walk you through example after example after example, many examples of that calm before the storm effect technique and what to look for. It's so powerful. And plus I've got many videos on YouTube about it as well too, guys, if you don't want to go and check that stuff out there. Doesn't bother me. Hi John, message retracted due to spelling mistakes. Still value your content and your thoughts. No problem. Okay, thanks, sir. Like you're sharing so much. Have a great day, sir. No problem. Love and motivate. Fantastic. Love that. GDXJ is more exposed to silver miners than GDX. Okay, that's okay. Once again, Brad Nash. Um, that's not my view. In my opinion, doesn't matter. Like it, if but what could be, what is, doesn't matter, right? There is no opinion. There is okay. The facts is this is what the market's doing. My system says there's a massive high probability. There's probably 80% chance of it making a massive move. So my reward to the risk, if I get into GDX, is probably going to be probably 5 to 10 to 1. Think about that. Once I do get into the GDXJ, my risk to reward is going to be 5 to 10 to 1. Just like with gold, right? When gold broke out and we made a massive move, I knew my risk was going to be much more, my reward to my risk was going to be much higher than my risk. Let's see here. Do you see strength in the dollar against the Aussie? I'm not sure about that. Haven't really looked into that. So just don't be buying based on a thought, guys. That's the worst thing to do, right? You gotta have an edge. Don't just like, oh, well, gold's gonna keep going up, or silver's gonna keep going up, or the GDXJ is gonna keep going up, so why not just buy now? Don't, guys. You gotta have an edge in the markets, okay? Be smart. Be smart. Let's see what we got here. Oh, jeez. I don't have any reason to. I was sucked in a few minutes. Okay, I don't have any reason to live here. I'm done. Cool. Bye. What about platinum? I haven't actually looked at the platinum. That there. Your thoughts on platinum, please. Once again, y'all haven't actually looked at platinum. Long GDXJ since April, still holding. Fantastic, fantastic. Just make sure you have a plan in place, and that's all good. So anyway, guys, that's it for me. Once again, just go down to johnsfreegift.com if more about. I've got a whole trading course I'm giving you away for free. And the very first video you get, which is basically that calm before the storm, or what I call a price and time. And I teach you more about. I teach you more about that technique, okay? Right. So obviously I have some coaching and stuff for sale, guys. But even if you don't buy it, there's a free course there to help you out, okay? And even if you don't like that, just go through my trading education section on YouTube, and you'll be able to see a whole bunch of free education there. So, John Howard, cheers. Way too many innovators busting out on the marketplace all at once at this moment. This is a game-changing time. Feels like a fall coming, but it's not coming. Jonathan, things take time, okay? Things take time. Just like when they say there's a market crash coming, a market crash takes time, right? So if you look at the 2008 stock market crash, what was that? That was 2008. That was a whole 12 months worth of time. So things take time for them to form. Things take time for them to pull back. You know, they take a lot longer than what we think. Because we say market crash coming, it's going to happen tomorrow. We think an instant down day. So that's where we've got to have a realistic expectation about these markets, that things do take time. Just like with gold, when I got into gold when it broke above 1400, it took over 12 months for this thing to happen. Metals are flying due to fear and misunderstandings of what we're on the verge of experiencing. The market is about to bust to highs. You might be right. But don't be placing a trade based on a thought there, Jonathan. Please don't do that. Above all, I only be placing a position. And once again, when you place a position, you have a certain level that you're going to out for either a loss. If it is a loss, and you say, if this is a loss, am I still protecting myself? That's the number one thing, guys, to stay in the game, because there's, next month and next year and there's a year after that, there's going to be some more amazing opportunities. The last thing you want to do is risk too much money too quickly, blow yourselves out of the market, and then all these amazing opportunities that will come that are going to provide, just like gold did over 12 months ago, just like silver did last year for me, just like GDX is doing right now. See what I'm saying there, guys? Like every year, there's a couple of really good, amazing opportunities if you understand this one amazing concept called price and time, or the calm before the storm effect. You can do so well. Just be patient, guys. Plus also, within the mix of that, I do a lot of short-term trading as well too. Hi, John. I really struggle with patience with trading, but I do not have this problem when investing. How do I go about fixing this, please? Well, just focus on investing positions then. If you don't have that problem with investing, then place positions, have a couple of year view at least on something. Based on the stuff that I'm talking about today, that'll give you the best chance of it making a big move, and then just hold it and just say to yourself, my expectations is that this is going to make a nice move, but nice moves take many years to happen, and within that many years, we're likely to get swings, pullbacks, and so on and so forth. So we're going to go through the gyrations. So it's just DMC. It's just your expectations of that position you're in. So you just got to expect that if you're investing, even if you're trading, it's one of the worst things that can sort of kill you there. So I hope that makes sense. But I do not have this problem when investing. So just stick to investing then, because with investing, there's probably a good, maybe 3 or 4 amazing opportunities that come around every year. That just like gold did a couple of years ago, 12 months ago, just like silver last year, just the stuff that I'm talking about right now. You know what I mean? So, and just let it go. Just let it go. This is just like the tech boom. Expect way too many come into the markets too quickly, which caused the bust. This time is different. Jeez, I've heard that before. Caught you late, so I missed out on the bit. We'll pay attention to the start of times because I like your raw talks and the attitude you have to trading. Fantastic, Gerald. Fantastic. All right, guys. My only hope right now, guys, my hope is that if you watched all the way through, thank you so much for your support. My only hope in doing today's session for you was to give you some ideas about the way the markets work, what we should be looking at, what we should be focusing, and what's actually helped me do really well out of this gold bull move, what I'm doing with silver, what I'm doing with these other markets, based on a sound fundamental principle of these markets there. So, all right, guys, that's it for me. Have an amazing weekend, and I'm really, really excited, guys. There's so many amazing opportunities. Be patient and get ready for exciting times to come.